And now for a Next News special report.
Brace yourselves, America, as we stare into the abyss of a looming financial collapse. The grim reaper of commercial real estate is undeterred, and the eerie undercurrents of international instability, well, they're looming over us. Federal banking agencies agree. A financial tsunami of unprecedented proportions is imminent. We're on the precipice of a storm that has the potential to shatter the very foundations of our economy. The lurking danger of office space vacancies is shrouded in deception, and the future demands for renewing leases look bleak. Our economy is barreling towards a precipice propelled by leadership that appears unconcerned by the increasingly evident threats. In the midst of this darkness, gold gleams as a beacon of hope, so don't miss my final thought as I reveal the shocking truth about the state of our financial system. Now, folks, as we navigate through these turbulent economic waters, it's crucial to have a reliable financial lifeboat. Just like how gold weathers the storm of market instability, Noble Gold Investments is your steadfast partner in securing your financial future. Their expert team will guide you through the process of diversifying your portfolio with precious metals, ensuring you're not left adrift in the face of economic uncertainty. And countless satisfied customers testified to Noble Gold's integrity and expertise, and now they're offering a free quarter-ounce British gold standard coin when you open a qualified account. Don't let your wealth sink with the ship. Visit nextnewsgold.com. That's nextnewsgold.com, or call that number on the screen, 877-646-5347. Noble Gold Investments is the only gold company that I trust. So as we navigate the treacherous waters of our economy, the looming specter of a commercial real estate crisis grows ever more ominous. Federal banking oversight agencies are sounding the alarm, warning of a potential tsunami of problems in the office space sector that could bring the U.S. banking system to its knees. Now, the Office of Financial Research, the OFR, created under the Dodd-Frank financial reform legislation of 2010, has shed light on the alarming disparity between the current office vacancy rate of 16.4% and the actual occupancy rate of a mere 49.8%. This means that companies are paying rent for twice as much space as they're actually using, a trend that spells disaster for future lease renewals. Now, the chart here illustrates the grim reality of office space occupancy in select cities. OFR predicts that while high-quality office space may weather the storm, second-generation space will struggle to find tenants, leading to a wave of demolitions and conversions. This stark assessment is echoed in OFR's 2023 annual report, which warns of the impending doom facing less desirable office spaces. The Financial Stability Oversight Council, or the FSOC, another creation of Dodd-Frank's legislation, is tasked with monitoring financial stability risk. In their 2023 annual report, they note that commercial real estate loans total nearly $6 trillion and represent a significant portion of many financial institutes' assets. Banks hold a staggering, ready for this, 50% of these loans, with the remainder held by insurance companies, holders of commercial-backed securities, and debt funds. Now, the report also reveals that commercial real estate is the largest loan category for nearly half of all U.S. banks, and more than a quarter of these banks have CRE loan portfolios that are large relative to their capital. Now, this concentration of risk is a ticking time bomb waiting to detonate and send shockwaves throughout the financial system. Now, the deterioration of office property prices is another red flag, with an index showing a 30% drop from pre-pandemic levels as of September of 2023. While Fed Chair Jerome Powell downplays the risk to the largest banks, FDIC Chair Martin Gruberg, well, he reveals a more unsettling truth. Take a look.
We have identified the banks that have high commercial real estate concentrations, particularly office and retail, and other ones that have been affected a lot. We identify them, and we are in dialogue with them around, do you have your arms around this problem? Do you have enough capital? Do you have enough liquidity? Do you have a plan? You're going to take losses here. Are you being truthful with yourself and with your owners? And so we've been working with them, and so for some time we've been doing that. And this is a problem that we'll be working on for years more, I'm sure. There will be bank failures, but this is not the big banks. If you look at the very big banks, it's not a first-order issue for any of the very large banks. It's more smaller and medium-sized banks that have these issues.
There will be bank failures. Wow, thanks. Oh, but don't worry, they're just little guys.
We're working with them. We're getting through it. I think it's manageable is the word I would use, but it's a very active thing for us and the other regulators, and it will be for some time.
Thank you. Do you have concerns? Let me just ask you this. As you're talking with these small and medium-sized banks, because we know there's always could be a contagion, which we've seen in the past, do you have concerns that if they fail, that somehow this is going to impact the financial sector? And are you prepared and trying to address that and prevent that from happening?
We're trying to stay ahead of that. So we also reached out to banks that had high concentrations of uninsured deposits, and particularly uninsured deposits, and a lot of commercial real estate in the office sector. So we're well aware of that issue, and we're just trying to stay ahead of it on a bank-by-bank basis and overall.
Okay.
And so far, we've been able to do that.
Thank you.
As of December 31st, 2023, the past due rate for commercial real estate loans at banks with more than $250 billion in assets stands at a staggering 4.11%. That is 1.66% higher than at the end of the fourth quarter of 2008 when the financial crisis was in full swing. In comparison, banks with $10 billion to $250 billion in assets have a past due rate of 1.35%, while those with $1 billion to $10 billion in assets have a negligible past due rate of 0.64. Central business district office buildings have been hit the hardest, with a Washington, D.C. building selling for 70% less than its 2017 price. And this is just the tip of the iceberg as the demand for office space continues to plummet in the wake of the pandemic and the rise of remote work. So as the storm clouds gather, it's clear that the commercial real estate crisis poses a grave threat to the stability of our banking system and the economy as a whole. The largest banks, with their significant exposure to troubled CRE loans, are particularly vulnerable despite Fed Chair Powell's attempts to downplay the risk. Well, the writing's on the wall. Now, the question now is not if, but when the levee will break and the floodwaters of economic turmoil will come rushing in. As Americans, we must brace ourselves for the impact and take steps to protect our financial well-being. The road ahead is fraught with uncertainty, but one thing is clear: the commercial real estate crisis is a ticking time bomb, and time is running out. If you got value from this report, tap subscribe. My final thought is next. The specter of a commercial real estate collapse looms large over our economy, threatening to bring the U.S. banking system to its knees. As the demand for office space plummets and property values deteriorate, the largest banks find themselves particularly vulnerable with their significant exposure to troubled CRE loans. The warning signs are clear, and the time to act is now. As Americans, we must take steps to protect our financial well-being in the face of this impending storm, because the road ahead is fraught with uncertainty, but one thing remains certain: gold stands as a beacon of hope, a safe haven in the tempest of economic turmoil. So don't let your wealth sink with the ship. Invest in gold and secure your financial future, because the clock is ticking and the time to act is now. Congratulations, you made it to the end of the video. Now keep up your quest for truth with this next news report. And if you found our channel enlightening, join the millions who agree with you. Tap subscribe. Thank you for watching the Next News Network.